Hi friends, welcome to SNCA Study Club, a platform for CA final students. Here I am taking about essay 510 initial audit engagement. What is mean by this initial audit engagement? Initial audit engagement. What is mean by this initial audit engagement? It means that the previous year financial statement is not audited or audited by predecessor auditor. That is, suppose this is an entity. It is the previous year financial statements of that entity. X is appointed to make the audit of the entity, audit on and issue audit report on that financial statement. So X is entering into that entity and inquiring them whether these previous year financials were audited or not audited. So entity is telling that yeah, it is audited. So X asking who audited that same? They tell Y audited. So it means that it has been audited by the predecessor auditor, or they are telling that no, it is not audited. So X is asking, are you a new entity? A newly established entity? So the entity, no, we are not a newly established entity. So either the previous year financial statements were not audited or audited by a predecessor auditor. That is, SA 510 is not applicable to a newly established entity. The financial statements of a newly established entity is not covered as per SA 510. So initial audit engagement, audit evidence, initial audit engagement. So when we are appointed as an auditor of an entity, that is suppose X, here in this case X has been appointed as the auditor of the entity. X have to check the financial statement. In that financial statement, I have already explained the one case. X will ask the entity whether it has previous financial statements were audited or not audited. Entity is telling that no, it is not audited. So auditor have to perform additional audit procedure. I will explain what are that additional audit procedure. Now just look at this part. Yeah, it has been audited. Then auditor will ask the previous year auditors previous year audit report. An auditor will check whether there exists any modification. If modification exists, then they ask the management whether you resolve the modification. If it is resolved, auditor is not having any duty. That is, auditor is not required to perform any audit procedure. Auditor have to check current year financials, not the previous year financials or any matters with respect of the previous year financials. But if the same modification is not resolved, auditor should arrive at an opinion that or auditor shall issue a modification to the audit report as per SA 705, because previous year financial statement already includes some modification and the entity has not corrected that modification. It means that the current year financial also will be what? Incorrect, or it is not provide the true and fair view of the state of affairs of that organization. So they will issue modification to the audit report. Now we will arrive at this case. Additional audit procedures. What are that additional audit procedure? Or what are the factors that will affect the audit procedure that is to be performed by the auditor with respect of the opening balance? So auditor have to check the closing balance of previous financial year, and auditor have to check whether closing balance of the previous year financial has been correctly brought forward, whether current year opening balance is equal to previous year closing balance or not. Then check whether there exists any material misstatement in the closing balance of the previous financial year. Then auditor have to check previous year. If the previous year financial statements were audited, auditor have to check audit report plus previous year financial statement. Then auditor may perform specific audit procedure. Specific audit procedure means this mainly for the purpose of, just example, reconciliation. Opening balance plus purchase minus sales is equal to closing balance, whether the closing balance is equal to the same equation. And then auditor shall check accounting policy applied by the entity. What are the accounting policy applied? Whether they are consistently applying this accounting policy. If there are any changes, what is the effect of that changes? Whether that changes has been properly disclosed and the effect has been properly presented in the financial statement. Why they change that accounting policy? These have to be followed by the auditor. Then prior period items. Auditor have to check whether there exist any unadjusted prior period items, whether it has been properly adjusted or not. Then auditor have to determine current year audit procedure, that is if auditor is performing audit procedures in this current year, whether it is providing any evidence to the prior period items or prior period financials. It means financial statements provided a debtors 1 lakh rupee. In the current year, they found 5,000 bad debt. So it is providing audit evidence with respect of the provision which has been made in the previous year financial statement or with respect of the debtors. So they are providing evidence, or they collected 90,000 rupee from the debtors. So remaining 10,000 is there. So auditor had to determine whether audit procedure performed in the current year providing any evidence to the previous year financial statement. Then auditor have to determine whether the balance, opening balance is provided agreeing with the financial statement. That is, previous year financial statement have to be analyzed and check whether it has been in agreement with that previous year financial statement. Now we have to check what are the factors that is affecting the extent of audit procedure with respect of this initial audit engagement. First of all, auditor have to determine the significance of opening balance, significance or materiality, whether this opening balance is significant. Then whether previous year financial statement is audited or not audited, whether predecessor auditor issue modification to the audit report, whether they following the accounting policy consistently or whether there is exist any changes. Then nature of accounting balance and class of transaction. So these are the factors that may mainly affect the audit procedure with respect of initial audit engagement. So initial audit engagement means it is nothing. This is an audit engagement where previous year financial statements were not audited or audited by the predecessor auditor. Then this is not applicable to a newly established entity. Auditor have to check whether the previous year financial statements is audited or not audited. In case auditor check whether there exists any modification. In case where there exists any modification, auditor have to determine whether it has been resolved or not resolved. In case if it is not resolved, auditor shall issue a modification to the audit report. If the previous year financial statements is not audited, auditor have to perform some audit procedure so as to obtain evidence as to the opening balance of the current year financial statement and determine whether the previous year closing balance has been correctly brought forward to the ledgers and the financial statements, whether the opening balance is in agreement with the previous year financial statement, whether there exists any risk of material misstatement with respect of the opening balance, whether the internal control system of the entities function efficiently and effectively, whether they are following the accounting policy or whether they are preparing the financial statements as per the applicable financial reporting framework, whether there exist any changes into the accounting policy, whether it has been properly disclosed, whether the effect has been properly disclosed. Then auditor shall determine whether current year audit procedures performed on the financial statement provide any evidence as to the previous year opening balance. Then what? These are the main aspects or these are the main factors that is to be considered by an auditor with respect of initial audit engagement. Here we completed what? Essay 510. Okay. All the best.